Hey guys, so this is going to be my fourth talk regarding stocks. So I've previously talked about what the potential for the stock market is, what the averages are. Um, I basically think like 8% is like about the average for the stock market for return versus a bank savings account, which might be 0.8% interest, or you may be able to find like 3.5 to 4.5% interest for a bank account. Again, stock market, you could basically expect 8% for the overall market. That's kind of the figure a lot of financial advisors use. But I think, if we're focusing on the right stocks, we could probably see 40% returns. At a 40% return, just to reiterate from previous videos, that's going to turn $1,000 investment to 10,000 in 7 years. And also in 7 years, so this could either be in 7 years if you start with 10,000, or if you go from 1,000 to 10,000 in 7 more years, you're going to get to 100,000, or you could turn 100,000 into a million. So that's been kind of the previous videos. This video is going to be basically we're going to start to develop the types of stocks we're going to actually invest in, and we're going to talk about some of the pitfalls and some of the mistakes I've made in the last 15 years or so. We to make like serious, like not losing sleep kind of money, we need to make sure we're investing and not gambling. A lot of the stock market, people end up getting really sucked into the gambling aspect of it. To give you a couple of ideas of what gambling might be, I'm gonna give you some scenarios into my own history. Um, Going back in the 10 to 15 year range, a couple of investments I had been involved in. Borders. I don't know if anyone remembers Borders or if I'm really aging myself, but Borders was a bookstore just like Barnes and Noble, and they filed for bankruptcy. So their stock plummeted. So what did I do? I put a lot of money into it. And what does everyone think happened? Do you see any Borders stores around? Nope. So what do you think happened to all my money? It's gone. It's gone. Probably put 1,000, 5,000 bucks into Borders. I think it was like 5,000. I can't remember. And it's all gone. Another scenario. I remember a company, I believe Pilgrim's Pride Chicken. I believe they filed for bankruptcy. I believe my wife put some money into Pilgrim's Pride Chicken. And the thing about Pilgrim's Pride Chicken is they actually ended up coming out of the bankruptcy. So we actually were able to go on a nice family trip because of that many, many, many years ago. So that worked out. Does anyone remember Keurig? I say remember because I feel like it's not as popular as it once was, but it's still around. Way back in the day, Keurig had a patent for the kind of instant coffee basically the instant coffee device, the Keurig is. And that patent was expiring. Around the time the patent was expiring, there was a lot of panic. The stock plummeted because now anyone could make basically what was a clone of Keurig. And in particular, Starbucks was coming out with their own product that was very similar and was going to be a competition for Keurig. So, what did I do when the stock plummeted? I invested in it. Now, before you think that I lost all my money on that, I actually made a good amount of profit off that. I at least doubled my position. Might have even tripled or quadrupled. My memory is a little fuzzy. And I was definitely walking on clouds when that happened. And it happened over the course of about a year. It was like a year of ups and downs and stress. And it panned out, and I sold. And I actually sold a little too early because it actually went on to gain even more. And eventually the company kind of got bought out by, I don't remember who, but maybe Dr. Pepper? I don't know. So a company bought Green Mountain Coffee, so it was GMCR back in the day, and they got bought out. But before getting bought out, I made a decent amount of money with them, so that was good. Right around that time, I was looking for my next investment, and does anyone remember BlackBerry? BlackBerry was obviously a very popular phone company, manufacturer, product, whatever you want to call it. And they were very popular before the iPhone was a thing. So iPhone kind of dethroned BlackBerry. And right around the time that Keurig was kind of digging itself out of a hole, and I made some decent money off of that, BlackBerry picked my interest because they were kind of trying to take on Apple, the Apple iPhone, with their new BlackBerry 10 operating system. So BlackBerry had plummeted quite a bit over the years because their market dominance had just been dwindling. And I put basically all of the profits from my win with GMCR into BlackBerry. And long story short, I don't think anyone is watching this video on a BlackBerry 10 operating system anymore. So you can imagine what happened to my profits. Not a good investment. Moving along, there have been other companies that followed the same trend. MoviePass. I don't know if anyone remembers MoviePass, but it was an awful business model. I don't know in what planet $10 a month is going to cover a $20 movie ticket 3, 4, 5, 6, 7, 8 times a month. It just financially did not make sense. I invested in it anyway, and again, I lost all my money. So, long story short, these are all examples of gambling. They're not actual investments. The same could be said for Virgin Galactic. This is a company that, is trying to become something, but it's not really anything. It doesn't actually make any money. It's just all gambling. So these are the pitfalls to avoid. If there's ever a situation where a company is plummeting, I'm not saying don't invest in it, but that is a gamble. and treat it as a gamble. Treat it as a casino. Don't treat it as an investment, because it's not an investment. It is a gamble. Um, really do some deep thinking and try to identify within yourself the difference between a gamble and an investment. Every year, I will tell you, there's a new thing. A few years ago, the new thing was the legal cannabis market. Um, Another year, um, various forms of cryptocurrency. Um, Another year, there's just, GameStop, AMC. I don't know if any of these sound familiar. These aren't really investments, they're gambles, because they're kind of relying on market manipulation. And I'll tell you, any money you're going to make is going to be like within weeks to a month of hearing something like this. And usually by the time you hear about it, it's actually too late. These are not things you really want to be putting your money into. If someone else is telling you, oh, get in on this stock because it's the latest and greatest, just block it out of your mind. Like, do what you will, but don't count it towards your investment that's going to be your long-term bread and butter. It's just not ever really going to be a thing. There is like a 0.01% chance that stock is going to actually work out. So these are the pitfalls, and yeah, that's really it. So I'm getting closer to basically telling people, leading people in the right direction as to actually what we should be investing in, because again, I just want to spark people's desire to actually make money. Previously, we've covered, what you can expect from a savings account versus what you can expect from stocks, and we've also discussed getting people the means to actually invest in stocks, and we've discussed what is a decent initial investment, and what that could mean for 7 years from now, 14 years from now, 21 years from now. And we have also discussed the importance of frequent contributions. So if you're investing $20 a week into a stock and you're just setting and forgetting it, do you want that to be on a gamble? So let's play a game. You pretend that you're not going to be able to make any changes after today, and whatever you decide to invest in, so you can do $20 a week for the rest of your life, and you can't switch the stock that you put that on. What are you going to put it on? Are you going to put it on a gamble like BlackBerry or Borders? Like if Borders filed for bankruptcy, are you going to put your $20 a week for the rest of your life on that stock? That's going nowhere. That's going to be gone. BlackBerry, it's just, look at the financials. Look how much money they're making. There's so many stocks out there that don't actually make money. So why do people buy them? If the company doesn't make money, how are they going to give you value? How are they going to expand? So this is the game. You set $20 a week and you can't change the stock. What are you going to pick? So subscribe, look at the playlist, go on to the next video, because we're getting closer to kind of talking about which stocks are safe. Because I'm telling you right now, out of the whole stock market, there aren't many. There aren't many that are actually going to perform. So that's it for this talk. And again, just subscribe and keep an eye on the playlist. And we're getting closer to kind of talking about where we should be putting our money.